Hello traders, the title of the video is how to count Elliott waves like an expert. Are you an Elliott wave practitioner? Are you an Elliott wave student? Are you an Elliott wave expert? The question is how one can count Elliott waves like an expert. So when we use the word expert, a trader may think that is someone who will always get the Elliott wave count accurately, precisely, without any mistakes. Well, that's completely far from the truth because the experts can make mistakes, but they understand that they have made mistakes and they are able to pull themselves out of the mud, so to speak, all right? So when we are talking about an Elliott wave expert, doesn't mean that that person cannot make any mistake at all, but that person can make a mistake, but we quickly pull, himself or herself out of trouble, and recognize the error or the mistake, or understand quickly what is taking place and rectify or amend, the problem quickly, all right? So this is about, how to count Elliott wave like an expert. So we clarify the word expert, all right? So you want to be able to count wave, and also when there is a mistake, and you, all right, you are able to recognize the mistakes, all right, and quickly, rectify the situation, amend the situation, all right, and get back into line very fast, all right? You understand the Elliott wave principle, so you are not violating the Elliott wave principle. You are able to count wave. You can recognize, the complex wave. But when it's out of your hand, when it becomes too complex, you will be able to agree that this one, I have never come across it, and so on and so on, all right? So for this demonstration, the financial instrument that we're going to use is Costco Wholesale Corporation. This is another American stock, EPIC COST, all right? Charlie Oscar Sierra Tango, belonging to the consumer defensive sector, discount stores, all right? So I want to draw attention to the chart here because this is what we are doing all the time, the same thing, counting wave, validating wave, analyzing the chart using the Elliott wave principle, nothing new. So we're going to do exactly the same thing again today. This time we are using again another American stock because this is the data that I got. This is the first wave. So we're going to start first, just with our preliminary wave count. I'm on a yearly chart, all right? So I've done a bit of homework to avoid that the video is too long. So the second wave is a flat correction. So if you do not know what is a flat correction, you need to go to www.24elliottwaves.com to learn more about a flat correction, all right? If you are day trading using the Elliott wave principle, you should master the flat correction because you will see very often for day trading is one of the powerful Elliott wave pattern for day trading, the flat correction. Very, very important. So this is the first wave. Going to color it in dark green. That's the first wave. The second wave, I'll color it, I'll leave it red. That's the red lines here, 1, 2, 3. You can see that I apply Fibonacci extension to the first wave, and I discounted the shadow here, as I've been telling traders already, all right? And now, after applying the Fibonacci extension to the first wave, we can see that our 138.2% Fibonacci extension level is right there, and this is one of the characteristics of the flat correction. The price will go into the 138.2% level and then come back down. Stay with me, please, even if you disagree, because we're going to go back to the monthly chart. We're going to look at everything carefully like an expert, all right? Okay, so this is the second wave, which is a flat correction, and now we are in the third wave. I have a warning for traders when you are counting wave like this, because it looks quite easy on the yearly chart to identify, especially the third Elliott wave. This is the third Elliott wave, but at the end, sometime of you may see like this, like a third Elliott wave. If you see all this shadow or here, you need to be careful because there are more information here that are hidden. But on the yearly chart, you may not see it. So like this now, if you just stop on the yearly chart, you will say first wave, okay, second wave flat correction, and then you will say third wave, and you will be saying that, okay, we are expecting the fourth wave, followed by the fifth wave, okay? All right, so that will be your expectation on the yearly chart. Yes or no? All right, just looking at it like this looks very simple. Or if you ask a child to count wave like this, that's what will happen straight away. Now, here we have a candlestick pattern. Traders that are following us at Day Pro Trader YouTube channel know that candlestick pattern. That's what we call one up, one down, one up, one down. It's a reversal candlestick pattern. So something is happening here. There are more information because we are in the yearly chart. But that candlestick pattern is not yet cooked, is not yet ready, all right, so to speak, is not yet formed. It will be completed if it stays like this, which means, okay, one doji and one inverted, okay, dragonfly doji, all right? Is the dragonfly doji, your complicated name, all right? So if it stays like this up to the end of December 2017, because today is the 23rd of June 2017, all right, the time is 12:49 London. If it stays like this, then we have one up, one down. But if it changes this one, because it's still going on up to the end of December, if it happens to change, then that pattern is gone, all right? So anytime we look at the candlestick pattern, those candlestick bar must close, and we can combine the wave count with the candlestick pattern. Okay, so that's what we see on the yearly chart. Everybody's happy, all right? Another thing I want to highlight quickly, you will notice that most momentum oscillators will stay overbought for a long time during the third Elliott wave, and a lot of technical traders will be busy selling, and the price will not budge at all. Okay, so now let's drop it down to the monthly chart and see what's going on at the top of our supposed to be a third Elliott wave. All right, so now one more time, as we are using the word expert, all right, how do you become, okay, an Elliott wave expert? You become an Elliott wave expert first by learning the theory. Then you are assimilating the theory, which means you are digesting the theory. You are able to duplicate that knowledge, all right? And then you practice over the year to gain more experience, to deal with different chart structure, price structure. You face different scenario. Sometimes you may be wrong, and then you realize why you were wrong, and then you don't repeat the same mistake again. You keep polishing it, counting when, you count it yourself, you go into the mind of other traders, you count it, you compare both, you dig into it. That's how you will become an Elliott wave expert. It's not going to happen to you just like this, all right? One day you wake up, you are fully fledged Elliott wave expert, all right? So it's not something, okay, you go to a college, you may pay £100,000 to somebody that may be an Elliott wave guru, which is okay if you want to, but that cost alone is not going to make you, at the end of the day, an Elliott wave expert. You need now to go and trade using the Elliott wave, a principle doing things that we are doing here on this channel, bringing out a chart, try to figure out what is the first way, blah, 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 going around and going through it all the time, sweating, all right? This is how you will become an Elliott wave expert. But sometimes we come across people who call themselves Elliott wave expert. What they are talking about, they are Elliott wave expert because they know the theory. They will tell you now this equal this, XYZ, this is what's going on. But when it comes to the crunch, this is what we are talking about, the crunch of counting wave and making a trading decision, they find it very difficult, all right? So a lot of professionals will tell you that they shake when it comes to, perform an Elliott wave count, all right? So don't think that it will happen one day. This is why we are recording videos like this, okay? Enough of my blah, blah, blah. Okay, now we are on the monthly chart. We have seen that, this is our flat correction. So this is a first wave. You see on the monthly chart, first wave, a flat correction right here. So 1, 2, 3, a bit messy here, B wave of the flat correction. You can see how the C part of the flat correction came down. This is the characteristic of the C wave or the flat correction. As people were thinking that the price has formed a new higher high in comparison to the previous impulse wave, price start coming down very fast. Everybody coming out. This is a very good sign. You see again here. It's a typical characteristic of the C wave, expanded C wave. The expanded flat correction is a beautiful Elliott wave pattern. And the C part, is good for day traders. You, as a day trader, you must love the C part of the flat correction because you must love the C part of the expanded, the expanded flat correction. The expanded flat correction, all right? Because there are different types of flat correction. As a day trader, you must be in love with the expanded flat correction, especially the C part of the expanded flat correction, because very often the price will come down very fast. And then you are out before anybody is complaining, all right? Beautiful. This is a flat correction. Now this is the third Elliott wave. If you look carefully at the structure of that third Elliott wave, that's so what we have done on the yearly chart very fast. We move and we want to see what's going on, Now by going down to the monthly chart, we are trying to, all right, look at it under microscope, all right, try to dissect, so to speak, the price structure. Happen to be that supposed to be the third wave is also subdivided into 5 mono wave. So first mono wave of the third wave, the second mono wave of the third wave pulled back to retest the moving average 14, very beautiful. And this is the third mono wave of the third wave itself. This is the fourth mono wave of the third wave. So let's put a bit of color into it to make it interesting. Green. I think green is good. Is it good? Turquoise, mais no. Okay, I'll use green, all right? Is it coming out clean? I'm not sure. Okay, if it's not clean, well, forgive me. Fourth mono wave. So first mono wave, second mono wave, third mono wave, fourth mono wave, and here it is beautifully done. And this is the fifth mono wave of the third wave. So now you understand what's going on now. What I was telling you on the yearly chart, the one up, one down candlestick bar is about this blah, 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 blah that is happening here. So what's going on here? What's going on, my friend? What's going on here? But one more time. You want to become an Elliott wave expert? You will go through this. So the warning I'm giving you to traders is, if you're on a yearly chart, you are counting wave, all right? You reach the top of the third Elliott wave or whatever, especially the third Elliott wave, you see all the shadow like this. Don't call it only third Elliott, because sometimes though it's quite easy to count wave on the yearly chart, one should drop it down to the monthly chart to investigate more. Otherwise, you will be thinking that fourth wave coming up, fifth wave coming later. Now that you see one up, one down, there are more information here, and that's why we are trying to investigate. You see, now the reason why I know is because I've dealt with it before. All right. So I have made a mistake calling something like this, so I will call it all the way up here, third Elliott wave, especially the fourth wave. I've done those mistakes before. That's how I know now. Okay. It's part of the learning curve. There's nothing wrong with it. You're learning. So what's the problem? All right. So our third Elliott wave is stopping right here. End of the third wave there. Beginning of the third wave right there. Okay, beautiful. So, all right, believe it as it is. First wave on the monthly chart. Second wave, flat correction. Third wave, expanded. Even the third Mano wave of the third wave is also a complex Mano wave. All right, moving out 14, doing a good job here. Probably retesting with a corrective wave nicely. Can you see everything? All right. So now, what's happening? So, on the yearly chart, we thought that we were only in the third wave, but we have more information here. This is the fourth wave on the yearly chart. So we already have the fourth wave, so we will not expect it again on the yearly chart. It's here. Okay? Unless there's something else that the prime may print later. All right? You remember what I said before? That whenever we are dealing with the third, the first, and the fifth wave, we must always think of wave extension, yes or no? So what we are about to call the fifth wave may be extended, but here there is something going on that is very interesting, all right? We are dealing with a messy ending diagonal. Okay, feel free to disagree. Feel free to bang the table. Feel free, all right, to do whatever you want to do. Is this an ending diagonal? So like an expert, whenever you do something, you want to question yourself first, isn't it? That's what the expert will do. So they will go around, they will say, all right, it is an ending diagonal. All right? You put a question mark on it. All right? This is how the expert will function. It is an ending diagonal. That is the question. So if you do not know what is an ending diagonal, it means that you need to go quickly to www.24elliottwaves.com, have a pint of beer or wine or your favorite drink or your can of drink, San Pellegrino. This is one of my favorite drinks, San Pellegrino. Okay, lemon juice. All right. And don't let anybody disturb you, and watch, read everything and watch the video relating to the ending diagonal, because you need to know. The ending diagonal is a very funny, so to speak, all right? It's a unique fifth wave that is confined in a triangle. And the internal wave of that unique fifth wave is, listen, is free, 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 free. You may be wondering, George, what kind of impulse wave is so divided into free, 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 free? Well, that is the ending diagonal. You want to know more? Go to 24elliottwaves.com and read everything and watch the full name for each video there. Though it's not very clear, some of them were clear. See, this one went 1, 2, 3. Sometimes all of them may not be clear. My recommendation to traders, which I said to traders, I think at 24 Stock Trader YouTube channel and also at the Day Pro Trader YouTube channel. What I was saying to Trader there is that whenever you are dealing with a triangle, do not worry too much about what is happening inside the triangle, but just focus on the triangle itself and you will be all right. All right, you will be all right. But as an area weight trader, we are quite like a scientist. You want to make sure everything aligning carefully here. Can we see 1, 2, 3? It's not very clear. So you want, as an expert, you are more concerned about the practicality of your wave count. That's why you do care about. Because you are in the financial market. Suppose you are an area wave analyst, okay, focusing the market for your client. What do you care about? You do care about your client making money. You do care about the practicality of the area wave count in the financial market. That's your number one priority. As long as you are doing that, well, you will be all right. So when you see a triangle, just acknowledge that, my friend, we have a triangle. And no one will deny it. People will argue that it's not free, but no one will deny that there is a triangle. And you will be all right, you see. So we have an ending diagonal here, which is a 5 wave, 1, 2, 3, 4, 5. That is your 5th wave ending right there. Very often, my friend, you can see it's coming up now, how the price volatile came down. When the Elliott wave traders identify, okay, the ending diagonal as is happening here for cost, by the way, my friend, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell, okay? Costco Wholesale Corporation. My objective at 24 Elliott Wave, okay, YouTube channel, is to give my best, okay, sharing Elliott Wave trading tips and tricks, so other traders may learn from what I know or may improve their Elliott Wave trading strategy. Our number one priority is to simplify the Elliott Wave principle without diluting it. So the reason why I'm saying this, you will be surprised. There are things going on behind the scene. People may get upset and say, George, you have recorded a video telling people to sell this stock. Who are you to do that? I'm not telling anyone to sell. Okay? So 1, 2, 3, 4, 5. Very often, my friend, when we see the ending diagonal at the end of an uptrend, is the loudest warning that there will be, okay, a move down. And that move is usually volatile. It's starting here now. Prime print itself down, down. I'm just repeating what, okay, I have learned, okay, about the Elliott wave ending diagonal. If you go on the web, you will see other traders talking about exactly the same thing. That when we have the ending diagonal, very often we'll see the price coming down very fast. Because we are on the yearly chart, we see the bigger picture already. So now on the yearly chart, that one up, one down, is part of the 5th wave that is formed right here. So, but if we didn't go to the monthly chart, we won't have seen it. All right. So there is a high chance that one up, one down may end up being a long candlestick bar, or it may stay like this. And then next year, because it's a reversal candlestick bar, so at the end of 2017, beginning of 2018, usually around mid-February, that's when the hedge fund will make their decision. All right. If we have the one up, one down candlestick pattern, as I showed you at the beginning of this tutorial, we may see another next year is more likely to be bearish for Costco Wholesale Corporation. However, my friend, before you get too excited, all right, and say that, Joe, you are the expert, I'm not the expert, all right? I'm ordinary Elliott wave trader. So instead of assuming that definitely is going to pop down, what can make this thing pop up? So as an expert, you will be prepared for that scenario also, yes or no. So you are an expert, your expectation is that it may go down. If you are truly an expert, you'll be prepared for the reverse. So the question you will ask is that, what will happen if the stock, if we were wrong, and the stock start going up? So that would be a good question to ask, isn't it? Because money is involved, isn't it? So if you empty your saving account hoping that, okay, this time you'll retire, and then the price going up, what will happen? So the point of what I've been saying to traders, a 2-4 stock trader and also a depot trader, is that whenever we see a triangle, just say that anything is possible. Just say that anything is possible. The price can change direction, though according to the Elliott wave principle, if the fifth wave is an ending diagonal, there is a high probability that the correction will be volatile and will be sharp down. But personally, I say to traders, hold it there as an expert. Always be ready to sell and be ready to buy. Anytime you see a triangle, just think of it that anything is possible. If the price breaks above a triangle, which I talk about 2-4 stock trader, and find a support, is a high probability bullish trading setup. Breaks above the triangle, retest, or form a higher low above any type of triangle, it's a high probability trading setup. One will use a different time frame trading method to trade it. On the other hand, if the price breaks below any triangle, a final resistance break below, retest, or form a lower high below any triangle, that is also a high probability bearish trading setup. We will use a different time frame trading method to control the risk. There is no zero risk trade. All of them, we must control the risk whether they are high probability trade or not. But for the ending diagonal, as we see like this, what usually takes place, the price usually just go print it down, boom, 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 boom. Sometimes it may not do that, but in most cases, that's what's happening. All right? So we have finished to count our wave. Our third Elliott wave in this case is an extended third wave because we have a complex wave. It was so when above the 161.8% Fibonacci extension level of this of the first wave. So we have an extended third wave. The fourth wave is normal because it's shallow, something like 38.2%. And now the reason why we have very often when we have the ending diagonal is that when the fifth wave is underway, the small money starts selling straight away. All right, that's why we have 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. There is an indication at the end of an uptrend that they are selling while the price is trying to go up. They are squeezing it out. Try to go up, they squeeze it down. So it starts going free, and then suddenly the pressure builds on, and then boom, down. But understand, this is a technical analysis. Economy news relating to Costco Wholesale Corporation, economy news relating to the consumer defensive sector may change the dynamics of this technical analysis. So do not forget that the price can go up and also can go down. Our expectation here, looking at the chart, at this point in time, that's what we can say. All right. So this is the end of this tutorial talking about how to count Elliott wave like an expert. You want to become an expert? You want to play both ways. All right. Both ways. You can play on any field, and you can understand it. When you are wrong, you are able to know that you are wrong, and you can pull yourself out of trouble very fast. Like sometime I told you, the Elliott wave expert, they count wave, they leave the chart like this, and they print it out. They keep it. They print. So like this now, you print it out, you keep in your file. So sometime the market may do something different. Then we go back again as an expert. All right? And you will look at it again and say, well, now the dynamic has changed. Look at this. Because we're on a yearly chart, that's all we can say. Or we can see. That's all we can see now, okay? All right, now I'm on the monthly chart, okay? If you go to the yearly chart, that's all we can see now, okay? So you print your preliminary wave count, you keep it aside, all right? You try to go into the mind of other traders. You see the various scenarios that can happen, and you are ready for it, and you are ready to handle it. If you are wrong, just say it. The trouble with first on YouTube, I see some comments, okay, not on my channel, on other channel, where traders were very, very aggressive to YouTube creators, saying, hey, you don't know, blah, 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 blah. They get into argument. But at the end of the day, while is that a YouTube creator, okay, wave count, all right? Have I been talking to Mike recently? Maybe. Okay. So if you have any question or suggestion, or I'll put in the comment section, and in due course, I will be recording another video to answer your specific question. If you find this video useful, truly useful, let us know by giving us the thumbs up. If you think that George, well, this is another useless blah blah blah, all right, give us the thumbs down. If you think that this is an essential tutorial for other traders, all right, feel free to share it on Google+, on Twitter, and also on Facebook. But before we wrap it up, I have one more thing I want to share with you, because we are talking about Elliott wave, how to count Elliott wave like an expert. You want to become an Elliott wave expert, you want to understand also how other traders are trading. You cannot call yourself an Elliott wave expert if you do not know how other market participants are trading. Here you can see that one more thing, the volume bar that I got here. The smart money bought the stock, okay, here. You can see the surge in trading volume here, and they bought it again here. Okay, this is in 2009, they bought it again. If now we are expecting it to pop out, we will be expecting another surge in trading volume here that will alert us that they are coming out. So if we see a surge in trading volume here, it doesn't mean straight away that they are popping out, but all is telling us that there is an increase in trading activity in this stock. Now that we are ready, we know that we are expecting it to come down. We are ready both way, up or down. So look out for another surge in trading volume in the near future here, and then always wait for a trading setup, and then implement a different time frame trading method to trade it. We will see at the end of 2017 what will happen here, but at this junction, that's all we can work with. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders, talking about how to count Elliott wave like an expert. Do you want to become an Elliott wave expert? That is the question. Happy trading to you all, and speak to you soon.